Good morning, everyone. Friday, June 9. It is a not smoky day here in New York City, thank the Lord. Jerry, how was Tampa air?
Tampa's great as usual. So great that probably that fire is another reason all the Yankees are going to be moving down here and messing up
Yeah,
Florida because it's so nice and warm and nice people and cheaper. But they just go to the East Coast and build these same neighborhoods with these same attitudes and big houses, and so it's. But not that many people from the Northeast have found Tampa yet. It's more of a, or this West Coast. It's more of a Midwestern thing. So, but anyways, it's
mm,
fun. Great here. Enjoying. Looking forward to the weekend. Like good week, good month in the markets last month. It seems CTAs did pretty well last month. What was the big drivers in performance from your
uh,
perspective?
I think stocks was one, and then I think the softs, sugar, some of those uh, other maybe not as popular markets that make it through to most people's uh, eyeballs and ears. They don't really know what's going on with sugar and cocoa and things like that. But those are good ones.
Interesting situation with the coffee where I trade three of them. Do you trade all three?
No,
Yeah.
I
Do
just
you
trade
trade
one.
U.S.? Oh, you just trade the U.S. or U.K.?
Yeah, yeah,
Yeah. So I have the U.K. and London coffee, and that's just been tremendously different. So once again, three markets with the same name, usually very correlated. Of course, um,
freeze.
one of them takes off. Maybe an outlier, who knows? But the other two haven't really done too much.
Yeah, I think I know orange juice has cooled off. Um, I think some of the shorts too were really good. The lean hogs, canola, milk, those were good. I mean, at least for me, they were pretty good. Um, and then the dollar strengthening again, for the most part, you know, especially against some of the more developed names, but also China. I think dollar China was one of my best positions last month, being long dollar against China.
Yeah, boy, that was a good trade. You and I hung in on that one. That was one of those typical things that people try to avoid. I don't want. It was a nice profit in the trade. It totally gave it all back and sunk like a rock,
Yep.
and we didn't get out. Our loose pants systems didn't get elected, and then it goes right back up. I mean, it's going to happen. As much as you kind of hate to get out. I mean, to hate to sit there with like, I could get back all this nice profit. Um, it doesn't always work that way. Even if you're a bad trader, you're going to get some good luck every now and then, even if you have a bad system. So we have good systems, and so we actually get, some unusual or luck that you weren't expecting. So yeah, that was, when you do the back test, the computer says, no, no, no. You look at all the trades, you should be longer term, hang in there, don't get out, don't have another exit to preserve that profit. And this is why, because sometimes, it works out well.
Yeah. Uh, it,
If it didn't work out well, we wouldn't do it. The computer would say, don't do it. It's obvious. Get out, get out.
right.
But I stick by my big statement that the biggest problem for all traders, including myself over the years, is getting out too quickly. People want to get out, take the profit, stop the bleeding, stop the pain, and then you just pick up another type of pain, fear,
Uh,
uh, fear of missing out, or the pain of missing out.
yeah, especially when you have, I think investors and bills and things, and you're getting close to month end, quarter end. You got a big fee looking at you, and or some other big cost that you have that you got to pay, and uh, you want to lock in some money to pay it, and things like that are real, that won't show themselves on a 45-second back test over the past 30, 40 years. Like, oh, that was easy. Look at all this money. Yeah. Okay.
Yeah.
You know.
Well, it's buried in there somewhere, but your emotions are not. Your emotions are just like, oh, look at the bottom line, it's great. And you're in the middle of a trade and you're getting your ass kicked and giving back money, and all your friends already got out. You're not saying, hey, bottom line is I make money over time. No, you're saying bottom line is this trade here, and I'm really not happy.
Yeah, I think simulations, back tests simulate actual trading pretty well, except for that damn feelings part.
Yeah.
That to me is like, oh yeah, well that's a big one though. Everyone knows what to do. You know what you should do. It's staring at you right in the face, but for whatever reason, there's so many different reasons. We as people have ways of not wanting to do it or not doing it. We'll justify it every which way we can, and sports are the same way.
I know we want to talk about Tim and Andrew, the wrestling match on TTU.
Yeah, that
but
was
I just thought of something that Tim said. He said he used this word red flag a lot. He had a couple of sayings that he kept repeating. And one of them was, Andrew, this is a red flag. And one of the red flags he talked about was going into meetings with clients or filling out questionnaires, due diligence questionnaires, and having to put in there something like, I had a minus 5% month once. And I was like, and he goes, that's a red flag. And I'm like, whoa, my God, that's a red flag, having a minus 5% month.
Yeah, that was the red flag. The fact that he actually had the down
Yeah.
month of 5%.
I was like, dude, I can double, triple your red flag. If that's a red flag, I've had some red flags. So yeah, I think it's, this is, I think it is in the brains of a lot of established CTAs that, the media, the clients, the institutions, they are defining what this red flag is and what is unacceptable, this volatility, this profit give back, this type of drawdown. And so that's the gospel. So you can pay attention, you other guys, to all this research and the back test. And the ultimate outcome, of course, it's very, very acceptable. But no, it's way more to it than that. I have to feed into this, my feelings, their feelings, and you're just obviously going to have to, at best, adopt some suboptimal rules, in my opinion.
Yeah. I mean, I'm going to look it up real fast. How many negative 5 month instances the S&P has had since, we'll take it back to 87 or something, when the B top first came out, like one of the first CTA indexes. Okay, how many negative? This is for the S&P total return index, so dividends included, all that stuff.
Yeah.
How many instances? This is through December 22. So February 88 through December 22. How many instances were there of negative 5% months or more? Is a total of how many months? Let's see. That is 419 months. So 419 months. And how many you think were under performance was negative 5 or below? What do you think?
You just said 419.
No, that's the total months.
Oh,
Total
that's
months
the total.
from February 88 to December 22. How many months now were
I'm going to say a third.
not that many? That's insane.
No? Okay. 10%.
Almost 10%. So
Yeah.
39 months.
Yeah.
39 months out of 419, which is 9.3%. Like, is the S&P, they're on fucking TV all day saying, oh, just buy it and hold it fucking forever. No problem. This is the easiest thing ever to do. This is what you should do, Grandma. Like, no one's there
Right.
like, well, listen.
But look,
we had a
the
5%
answer
month
to
once.
the
Relax.
come
Like,
the come back to that is we need to have someone on CNBC saying the same thing about trend following.
yeah,
Not to stop saying it. And that's what they've got that we don't have. They've got the club, the clique,
yeah,
the fraternity. We're all link arms. We're all in it together. And psychologically, you've seen these studies that say if everybody lost 5%, you feel so much better than I'm the only one who lost 5. You have a superior investment demonstrated, and it's going to be superior in the future, but it has a tendency to lose when stocks do well, and vice versa. Nothing's going to overcome that because it's just too much. We make money, trend following works because of the psychology involved in humans. We've talked about that many times, and this is one of the problems with that is that we're destined to never have the assets under management that people are never going to love us like they love the stocks unless trend following becomes the core investment and everybody owns it and they get brainwashed. Well, if trend following clients get brainwashed, that's good brainwashing, but not stocks.
sure. No. That's funny. So what comments, what thoughts do you have about that top traders conversation?
Oh, so much fun. I just highly recommend it. I've only listened to it twice. I'm going to listen to it again. They said something like inviting me on and doing round 2, but I don't know if it even, it's like the sequel, the sequels never do as well as the original, or seldom do as well. But it was like a Jerry Springer show. And I think maybe you and I should be more controversial and more, getting into the mud. What do you think?
Mean with each other?
Of course. I mean, we agree on too much. We like each other, but we do try to make the other person, make fun of them and look bad. It's just we got to do some of that.
That's just like locker room.
Yeah.
Boys being boys, ragging on each other type stuff.
Yeah. Tim took it too personal. He said Andrew was taking it too personal, but Tim took it really personal because he said, "Don't you take it personal, Andrew? But this is my entire life. This is how I built my company. This is how I put food on the table. I'm very sensitive about it." That's what he said. But you should not take it personal. So he got pretty exercised about some trivial stuff, but he did have a couple good points. But of course, Andrew, the best line ever. This is why Andrew is such a great guy. People like him. He's good at selling his product. It's different. It's not the same old drivel for managed futures people. He's unique. He's smart. He goes, "I highly recommend you don't invest in my fund." He's talking to Tim. "We clearly ran over your dog." I was just like, I put it on pause. I went to my desktop and I just tweeted that one sentence, the best line so far this year in managed futures. Because managed futures has a lot of good lines.
Yeah.
But anyways, the guy went from 60 million last year to over $1 billion in AUM. It's really the only way that ETF people can access the SocGen 20, the biggest, the best CTAs out there. So he left that part out. I wish he would have mentioned that because so far it's doing pretty well. There are obvious risks of concentration and lag. But what do you think about lag and concentration? Are you a fan? I don't know if you and I have. I'm not. People accuse me of being an irrational fan of DBMF and Andrew, but really I just think it's funny that it causes them headaches. I think it's kind of funny. They don't trend follow enough.
Yeah.
And they kind of badmouth classic trend following. So the enemy of my enemy is my friend. Well, they're not really my enemies. It's just they're kind of like self-righteous know-it-alls. And so Andrew causes them just a tiny bit of pain. I can multiply that times 10 and feel really good.
Yeah.
What do you think?
I think, well, as a as a trader who's been, trading other people's money for over a decade, I might view this differently than a regular investor who doesn't do any trading. But I see, Andrew's product as, all right, I could do better than that. I'm not going to copy somebody and rely on what they're doing to determine what I'm doing. And but if I didn't want to do that, if I didn't want to trade and want to do all this work and have the audits and run back tests and code up the system and do all that work every day, and then actually do it, hit buy, hit sell when I don't feel like it, then I could see, I want to get exposure to this space. It's too risky in my mind. Maybe it's too risky to pick Jerry, pick Mike, pick another fund, because something could happen with any one of them. But I want like the general group, and if I can't determine what an actual trend follower is, like, all right, well, the S&P is a formula that a committee kind of has, and we kind of know what it is, and there's a lot of replication, but we don't really know what the trend following method is. So, all right, I'm going to remove that risk. I'm going to go towards this ETF, DBMF, and kind of get a general thing. And I know that's not going to be perfect either, but at least it eliminates some of the risks that I don't like, which is trying to have to pick a fund directly or do it myself. And all right, well, okay, I'm good with that. And but yeah, it's not like a perfect solution, and I think Andrew said that. Like, well, we're not saying like we got you all beat now. We came up with something that replicates this SocGen index. Now we're going to kick all your asses every year in and year out. We're going to beat you every quarter type of thing. I don't think so. And it hasn't happened already. But
Andrew's just a guy. He's just a guy who is providing a service, like an administrator. He's not trading. He's just and he says, "I'm not a trader. I don't want to trade." Although he said he has some background. He's really good experience in background. But you're not going to do better than Andrew. You're not going to do better than those guys. This is the top 20 CTAs. And no one thinks you probably will do better. I mean, I'm just saying, I think you will. I think I'll do better. But no one else thinks that, because these are the top 20 CTAs. You would be lucky to invest in them. Andrew's saying, yeah, you can invest in them unless you come through me. And plus, you start the year with a 4%, 3% advantage. You have that edge, because I'm like that much in fees. So roll the dice. You're like, oh, hell yeah, because my alternative is not those 20, the best. Oh, they're not the best. Then the index is, what's the index even for? So you have to pretend it's a great investment. Institutions probably invest in all of them or a subset of them at a time. And now he's giving these ETF people the ability to do it with a big edge coming in. There's going to be some ups and downs due to the lag and due to replication, how it all works. And the concentration bothers me.
Right.
He nailed the back test, but what's the future going to look like? We don't know, but yeah.
Yeah, and I think they seem to have replicated an index of a bunch of funds, at least how it comes through in the P&L. I'm sure if we interviewed each one of them, they'd say, oh, yeah, we're different than all the rest. But yeah, well, your performance is really kind of close to the other guys. So, this is all just talk. We don't need to talk. We can kind of just do the numbers and figure it out ourselves. But they seem to have replicated a product that is heavily bonds focused. A lot of bonds, a lot of financials in general, but mostly seems to be mostly bonds. So of course, 1 year to the next, it can be highly different and vary tremendously between, say, me and you versus a DBMF or the SocGen, because we don't trade a lot of bonds. It's like, well, which one's better? Well, I don't know. depends what your look back is, and depends how open-minded you are about the future. If we looked at 2021, those products suck. We're better because we have more commodities. Then the next year, they're better because they had more bonds and we didn't. Okay, yeah, we made money in bonds, but we didn't have 3x the position size because they just decide to give more to bonds for whatever reason. Okay.
But that is kind of I think Tim was kind of missing a point a bit in that regard, because Andrew has a singular focus, which is to replicate the index.
Sure.
If Andrew has too many bonds, it's because the index has too many bonds. The SocGen, yeah. So there is room for other products, your product, my product. There's a new product out. There could be new products coming, replication or not, that have more commodities. But singularly focused, he is doing his job. It's kind of like when the S&P is down a lot, I don't complain to the index provider that I'm invested in that I lost money. Like, why didn't you protect me? Why didn't you do something? Why don't you have more commodities? Dude, you pay 5 bips, and I'm just replicating that stupid stock-only index. Oh, right. Yeah.
I'm making like this out ahead of time that I was going to copy it.
Yeah. And so it's the same with us. Why didn't you get out near the highs? Why didn't you make more money when stocks were great? Hey, in your mind, you know what trend following is. I kind of know what it is. We know what to expect. And you're going to get what you sort of expect. Don't go over into this idea of, I wish you had better systems, or I wish you did some counter trend things sometimes. But this is essentially what people say to themselves, essentially, because they buy it at the highs and get out at the lows.
Yeah, on maybe on that point, on the next point that I was thinking of, well, okay, Tim doesn't define alpha as he wouldn't include fee reduction in the alpha generating definition. Like, it wouldn't. No, that doesn't count.
Yeah, that was worth like 30 seconds. You're going around saying it's the purest form of alpha. Fee reduction is the purest form of alpha. It's not really alpha. Okay, cool. We all kind of know he's just making a joke. It's not really alpha. I asked ChatGPT if fee reduction was alpha. It said no. But we get the point. And we also understand that no one agrees on the definition of alpha all the time. Everyone knows what the hell reduction of fees means. Okay, so it unlocks more alpha. It unlocks more money to the client. I don't know. I don't care. But it was like, and he also made this point that, you may get a tap on the shoulder from the SEC. God. I mean, don't get emotional. Don't get personal. But you keep going around saying it's alpha. It's a purest form of alpha. You're going to get locked up in jail. I mean, oh my God. I thought that was just over the line a little bit.
Yeah, I mean, it's all fuzzy. I mean, I would define it, alpha, as more money, as something that puts more money in my pocket. That makes you score more points. I don't care what the reason is. You could say, well, this one's not really sustainable because whatever, or this one is kind of like cheap. It's kind of a cheap way to do it. Well, it doesn't matter. I don't care what the reason is. I just care what happens. And yeah, I mean, if you're starting off with a several percent benefit January 1st, that's pretty damn good. So then it just forces the other team to have better plays, do better things, to make more money throughout the year, to make up that advantage that other team carries. Okay.
Well, the only thing they could hope for, I mean, hope is not a good word, but look, if you're talking about those SocGen CTAs, if they make things better, then Andrew's picking up on that and his performance gets better. So the only thing that they like right now, Andrew's underperformed because of problems with replication. It's not the positions they have on. It's a guess of the positions they have on. So he's underperformed, and so people are like, oh yeah, I guess it does have some downside. Once again, those ETF investors have no choice except to say, hey, I prefer someone else's ETF or mutual fund. Uh, I don't like the risk of replication. That is probably something he has to face or improve his replication or the way his replication looks. I think 14 markets is unnecessarily too low. It's worked in the back test. He may want to add wheat and corn to the crude and gold, for God's sakes. Why not? And maybe add a couple more currencies to euro and yen only. And then, the balance is basically interest rates or the S&P. So, yeah, I don't know. I think it's pretty interesting. I just think it's funny. And he definitely has created a pretty decent business out of it. So who are we?
We're somebody.
That's right. We act like we're somebody for sure. Um, no, he did come up with this. I don't know if you remember this part, but Andrew admitted this was pretty wow. This was a wow factor. And Tim went for quantity over quality. He should have just honed in on the problems of lag and potentially in the future, the problems of only 14 markets. But Andrew talks about in March where he thought that the performance he was seeing, he thought that the CTAs were not losing money and they must have cut back on those short bond positions because they were rallying so fiercely due to Silicon Valley Bank. But then he says, no, they weren't reporting. They were too busy or something. Holy smokes.
Yeah, it's
So
kind of like, I mean, that's a huge red flag as an investor in it. Like, well, what if they are busy for a long time? Then you're kind of on your own. What do you
yeah.
do?
What if
And
they,
then we saw how dramatic having, let's say, I remember I think maybe the last time that this happened was March 2020, where if you were a day fucking late, a day later, and let's say your breakout, like getting out of, it was like Mexican peso or crude oil or something. It was a bunch of them. Like, whoa, one day made an enormous difference.
I thought about that earlier because you and I were living through that together. And I thought, oh my, with my own trading, I thought,
Yeah,
oh gracious, this
yeah,
is, and then he's waiting how many days? And we were waiting like, oh, let's just wait till in the morning. We'll do the trade in the morning. Ha!
right.
Man, Mexican
And
peso opens down 5 ATRs or something.
yeah, and even that was long, right? In those instances, that was a long time.
Yeah.
Um, I think that crude. I remember that crude oil move. This wasn't even when it went negative, and technically the front month, but it wasn't really the most traded. But whatever. Um, it was early March when it was, I think, down 30% that Sunday night. I forget the reason. I think it was a OPEC Russia deal or something. Something happened. But yeah, I mean, one day lag. That's you getting out up here and way down here, and that's a huge swing in P&L. And there goes your fee advantage. Like that. It's just gone. So that, yeah,
But
that was that. Yeah.
sometimes, yeah, it's gone for that period, let's say, or you're in the hole a little bit for a certain period. But as you well know, everything you can think of happens in trading. So you could see a situation where those actual trading from those 20 CTAs gets whipsawed. The market rallies, they get
Mm-hmm.
out of the positions, they go long, and then within a couple of days, they're back to being short. And Andrew's just like, oh, yeah, I didn't make any changes. I'm still short. And you're like, whoa, that's an amazing pickup in performance there because you can get whipsawed. You never know ahead of time. However, as we know, I think you have to assume the opposite, that it's going to always kick you in the ass, or at least net, it's going to kick you in the ass, because there's nothing as powerful as following the system exactly, and not following the system exactly is going to cause you more problems. And that's something we try to avoid. And there's no way for him to essentially follow these systems exactly. It's good that they're big. They trade slow. They have holding periods probably of 90 to 150 days or whatever. However, anything can happen. And he's probably going to be on the short end of that. But, at the end of the day, after a long career, he's raised billions of dollars. He's broken even to the index. All he did was break even. He provided people with something that they could not have gotten.
Right.
Start talking bad. Okay. Yeah. Okay. So everyone on YouTube is now going wrong, wrong, wrong. Okay. Yeah. I know where that kind of is wrong. They could have had other traders, Chesapeake, Dunn, you, me, whatever, mutual funds, Abby. Okay. These are the 20 best. Start trashing the 20 best. Okay, you just would have to say, well, you're right, they are the 20 best, and it's perfectly reasonable to assume that. It's just that the 20 best with a 3 or 4% edge every year, I'll take people who are not amongst the 20 best with their higher fees. I think that's safer. Okay, that's fair. Yeah, that's definitely fair. But
yeah, I think it's a good trade in theory, but yeah, those are the risks. I mean, something can just go wrong once, and that's a big one. If you're a trend trader and you're not getting out because you're waiting for the person that you're relying on to tell you when to get out, and he's just off making a sandwich, like, oh, I need to know when to get out, sir. Well, I'm busy. Well, oh shit, yeah. And now I'm down 10 in the or 5 or whatever the leverage could be. The index reports a couple of days later and it's down nothing, or it's up or something like that. That would be bad. Those are bad instances. And how long does it take now for maybe that replicator to get back kind of close to that index performance over time, or will it always kind of lag underneath it? It might lag underneath it, but it'll be close. But if it has these instances where it really falls behind because of these funds not reporting on time or something, or maybe they are doing something wrong that's like, that we would agree with and say, yeah, you're probably doing that wrong. You got too many bonds, big guy, that could hurt you. And then he's replicating one, maybe a crappier product because it's got too many bonds or whatever other reason, vol targeting, whatever. And then they itself have another problem where it's, the guy's making a sandwich, they're busy, and he's not getting his signals that he needs to keep close. So, I don't know. It's kind of a risky. That's risky to me. I mean, I don't know how many times he can get away with this. How many times is an investor, as a RIA, going to say, how come you fell behind this time? Yeah, they're lagging. We couldn't keep up with. We didn't know what they were exactly doing. Well, that's the whole fucking point. Is for you to know what they're doing so you can replicate them.
Yeah, but he's done well over the lifetime, and he's still ahead over the lifetime.
But I'm saying, how many times would an instance like this would he be able to get away with because of that reason?
I think it's going to be problematic to not only underperform for a calendar year, let's say year to date. People pay attention to year to date. If you're underperforming year to date, which he is, I think also if you're underperforming lifetime at the same time, that's more problematic. So he's got something to point to. Oh, before we go, I'm sorry I got to cut it short. I wanted to mention one more thing. There is a new product coming out where this is very interesting. It was kind of explained to me this morning, and I had heard about it but didn't realize. I mean, no, I think it's pretty interesting. But the guy is going to have Andrew-like replication of CTAs, plus he's going to use replication algorithms to replicate the systems from those CTAs. So he's going to have 50% system replication, like he's going to guess the breakouts, so that eliminates the lag.
Okay.
Then he's going to combine that with the return replication in positions, which has the lag. So I thought that was pretty interesting. I like this doubling down on like AI or technology or an algorithm. Like I thought initially he was choosing his own systems, and I was like, oh well, that's just like saying, okay, it's 50% S&P plus 50% my stock trading strategy. That's not an index. It's discretion. I mean, it's active management. But I think doing more replication in a different way, I love it. All right, sorry I got to go. Have a good trip. I know you're going on vacation. I hope you guys have a good time.
Yeah.
See, hope will we be back next week? Are you back in time for next week?
I might be able to. The last day, it'll be the last day that we leave.
Oh no! Yeah, I'm looking at the calendar.
So I gotta see what time we leave, but we might be able to do something. I just want to see if the time works out.
Okay.
I'll get back to you.
Oh, good. Well, we can take a week off. This was such a great episode. We can definitely. People need to watch this 2 or 3 times. I think 2 weeks off is.
And we could pick it up even with more thoughts, or if we get more questions or comments throughout the week, we can touch on them too.
Are you getting any questions from listeners of this podcast?
Yeah, more like trader questions that I don't want to be on here just coaching traders. Since you do a lot more of that type of talk on and work on the spaces, but I want to I don't want to blend it too much and have it the same conversation over and over again in all these different spots. But hopefully maybe this one will jar because it's more kind of industry and business focused, not necessarily just trader. Help me out with my system focused type stuff. But we'll have Andrew on or something like that. We'll
That's right. We can host round 2 of their skirmish.
Oh yeah.
You know what would be fun is for me to have a skirmish with somebody, and then you could host that.
Oh, I'll just sit back and drink my coffee.
That's what Niels did.
Yeah.
I mean, he had to get into it.
He didn't jump in and try to keep it. I don't
civil.
know.
Those guys were not in the same room either. They couldn't be. I wish it would have been on video, but I think everyone was remote, and so they it would have been good if they were in the same room because maybe it could have been some pushing and shoving.
Oh, that would have been fun. Podcasts.
All right.
Yeah, sorry.
I need to say goodbye.
You got to go. All right.
Yeah.
Talk next week.
Good weekend, everybody. Thanks, Mike.
Bye.
Bye.